Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin using logarithmic regression. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com, and you can lock in the lower rate. Let's go ahead and jump in. So, Bitcoin, I think, is best modeled using logarithmic regression. And one of the reasons for, again, using logarithmic regression is that it shows more accelerated growth early on, but then as time goes on, that growth diminishes. Okay, this is one of the main theories that we have on the channel, or not even just here, it's common sense, right? That you're going to see diminishing returns in most everything. And, one of the examples I've previously given is, if you have one monitor and then you get a second monitor, of course, that is nice because you have more real estate that you can do things on. But then if you had another monitor and another monitor after that, eventually you'll see just diminishing returns in the value that increasing monitors provides you. In the same way, when you think about asset classes and cryptocurrencies, more accelerated growth will happen earlier on rather than later on. It doesn't mean that there's still not a lot of money to be made in crypto. It just means that when you look at some of the blue chips, you need to understand that they will not put in the same returns than they have in past cycles. Okay. And the reason we say this is because we want to understand that every cycle will ultimately show diminished growth. Okay, diminished growth. And you can see that from one cycle to another. But the way to really capture it is to just simply look at our logarithmic regression bands, right? They do a really good job. You don't even need these regression bands to really see what I'm talking about. I mean, just look at it. You can see the data points that are not part of these bubbles that form. You can kind of see how they roll over as time goes on, right? And it looks like we're headed back down into that regression band. So let us really dissect this and then talk about what it means for Bitcoin and what it would also mean for other cryptocurrencies and how you would navigate the cryptocurrency asset class. So if you look at Bitcoin, you can see that it comes into this fair value logarithmic regression band fit to quote unquote non-bubble data fairly frequently. Well, once we get into it, we start to trend back higher as a function of time, right? I mean, it's not straight up. It's some accumulation and then slightly moving up. Here we had brief accumulation at the fair value fit to non-bubble data. We then came back down to it and we continued to trend higher for a while. And now you can see that once again, we've entered back into our fair value logarithmic regression band fit to non-bubble data. So the question is well, how long will it take for us to reach sort of the middle part of this band? Well, one thing to consider is that historically, we have always hit it at some point or another before going back up to the red regression band. So, what do I mean by that? After we hit the top here, we eventually hit the fair value. I mean, it wasn't the cycle bottom, but we eventually hit the fair value. Because again, the fair value fit to non-bubble data is, as we said, a monotonically increasing function. Once we hit the peak regression band here, again, we eventually hit the fair value before ultimately going back up to the peak. And then hitting the fair value again before ultimately going back up to the peak. So then the argument is that we have to hit the fair value again before we have really any sustained hope of going back up to the peak logarithmic regression band. Now, one of the things we can do is we can kind of measure how long it takes to go from, say, a peak to another peak. And it is actually somewhat random, right? It is actually somewhat random. This first one you can see took about 896 days. And this, if you look, this is from May of 2011 until November of 2013. So it took approximately 2.5 years. Then it took approximately 4 years. After that, it took approximately 3 years to go back up to the peak logarithmic regression band. So what you're seeing, a little over 3 years. So what you're seeing is there is a bit of randomness in there, at least as measured from peak to peak. So you essentially have 2.5 years, 4, And then this is probably, I don't know exactly what it is, but it's probably around like 3.2 or something when from going from this peak to hitting the regression band again. Now, technically speaking, Bitcoin went to a higher price in late 2021. We know that, right? It went to a higher price. But unfortunately, it didn't actually hit the regression band, which is also a monotonically increasing function. That's why a lot of people, not only myself, are sort of saying that from a technical perspective, the move to 64K was the top rather than the bounce to 69K. And I think that if you kind of accept that, it makes sense why there hasn't been an alt season. I've been warning you guys for months now that altcoins remain really risky, and that, you know, alt season in the sense that people are thinking about it is likely not around the corner like some you know, some people might want to believe that it is, but that the alt season that people are perhaps looking for was already captured in the bounce that took us back up to a new all-time high, but unable to really go put in, you know, prices into the logarithmic regression band. So I look at this and I say, I don't know how long it's going to take us to get back down to these levels, but I would say the more likely path for Bitcoin is to ultimately go back down closer to the fair value of Bitcoin fit to, again, quote unquote, non-bubble data. Now, what level would that correspond to? Well, as of today, it corresponds to approximately $22,000. And coincidentally, you should know there's a lot of confluence in this number, right? And by the way, I do think there's a very distinct possibility that we go sub 20K, right? I'm not going to, some people say that it can't happen. It can happen. You should know that it can happen. There's a lot of indicators that suggest we could go below 20K before hitting a macro bottom. Doesn't mean we can't go to 40K first, right? We could go to 40K first and then go to 20K. And I mean, I suppose if we just hold 30K for the next 6 months or something, then you could start to argue, okay, maybe we don't have to go to 20K if it gives us time, if it gives these longer term indicators time to slowly move higher. But, you know, there certainly is a strong chance of it happening. If you look at other things like the 200-week moving average, what do you notice with the 200-week moving average as it relates to Bitcoin and the fair value regression band? You'll note that once the 200-week hits the fair value, that's typically Bitcoin is at that level, okay? Or it goes to that level, right? So the 200-week moving average crosses the fair value right there. The price of Bitcoin was at it. Here, the fair value hit the 200-week moving average approximately. The 200-week moving average was ultimately hit. This is our date with destiny, as we've talked about. And then yet again, the 200-week moving average is at our fair value once again. And so my argument is that it's only a matter of time before we ultimately hit it. And, you know, the longer it takes us to go to that level, then theoretically the higher price it should correspond to. Today it corresponds to $22,000. So we need to understand that a $22,000 Bitcoin is theoretically in the cards. You know, and the reason we say that a sub 20K Bitcoin could happen is because we've hit the 300-week moving average before. And there's a lot of other indicators as well that would lead you to believe that we could go sub 20K if you look at other things like the like historical pullbacks for Bitcoin and, you know, the running 1-year ROI. But you can see that the 300-week moving average is currently at around $16,000, and we have hit it before. If you extend it over here, you could argue that we would have hit it had we had enough data to have a 300-week moving average by August of 2015. So when you look at this and you just sort of isolate the 200-week moving average, the logarithmic regression bands, it seems like we can use these logarithmic regression bands to try to help us understand where a potential market cycle bottom would be. But given the current state of the market and the downtrend that we're in, I would argue that Bitcoin is going to remain in a bear market for a while longer. And until we get back into the fair value regression band, is usually we don't usually show strength until then. What do I mean by that? Well, if you follow this channel enough, you'll know we talk about the bull market support band. And that's what we like to be above in order to hold support and go off into a bull market. But in a bear market, we hold resistance on this band. And we don't normally get back above it until after we go back to the fair value fit to, again, quote unquote, non-bubble data, right? Even in 2014, I mean, if you do get above it, it's very short-lived and we don't hold it as support. But again, resistance all the way through. We didn't actually start to show strength until we went back down into our fair value regression band. And then we finally started to move higher, holding support on the bull market support band. But it wasn't until after we went to the fair value fit to non-bubble data. Again, you can see it here. We didn't have the strength to really get above the 20-week SMA and put in some type of new market structure until after it reached the fair value and also the 200-week moving average. So yet again, I would look at this chart and say, you know, the story has been told before. okay, and we've been saying this for months, right? The story has been told before. You can see that, like this bear market, we have this bear market over here. Very similar structures. Yes, it's a double peak, but very similar structures in terms of where we are. We've followed this almost on a daily basis for months now. And I'm here to tell you yet again that, it looks like we're just sort of destined for the 20-week moving average to ultimately come down into the fair value regression band, right? Now, we can dissect that even more, believe it or not, right? Because there's some interesting things related to the bull market support band and the fair value that you might not get by just briefly looking at it. But if you really dissect this thing, let me show you something, okay? So, by the time the bull market support band hits the lower regression band, usually the cycle bottom's already in. You can see the cycle bottom occurred here. On most exchanges, this price over here was higher than this one. So, and if you want to call it a double bottom, you could, but really the bottom occurred in January 2015, which occurred before the bull market support band hit the fair value regression band, just even the top part of it, okay? Look in 2018. By the time the bull market support band fell below the upper part of the logarithmic regression band right here, the cycle bottom was already in. It was already in. And then if you go back to the cycle before that one, by the time the 20-week SMA crossed into the fair value regression band, the market cycle bottom was already in. So the argument becomes, right, is the bull market support band below it yet? No, it's not. But the upper part of this regression band is currently at around 30, let's get the exact number, currently just below $33,000. But the bull market support band is all the way up at around $40,000. So you could imagine that if we just kind of extrapolate this for a while, eventually it's going to cross below the, this band. And at that point, we might start to at least get somewhat optimistic about a market cycle bottom being in. But remember, these things can take longer than you expect. Imagine if Bitcoin bounces here back up to the bull market support band, then the 20-week SMA might level off again for a little bit and then continue its descent later on, which could eventually push this out even further. Okay? So, when you look at this chart, we need to understand that the 20-week SMA is very dynamic. It adjusts to the price because, again, it is dependent on the price from the last 20 weeks, the closing price. And so it's not just going to go down in a straight line. You can see there's been plenty of times where it might start to level out for a little bit and change directions. Over here, it was going down quickly, and then it sort of leveled out a little. The angle of descent wasn't quite as bad. And then we picked up steam again going into the market cycle bottom. So when I look at the chart, I say, given the macro conditions that we're in today, the macroeconomic conditions, the hawkish Fed, and just in general, traditional markets being in a bear market themselves, how can we not but expect our date with destiny to eventually come? How can we not expect for the bull market support band to eventually go below the upper part of the lower regression band? How can we not expect it? Okay? It seems like something that we should at least be prepared for because it's happened many times before, right? It's happened many times before. And I understand the cool thing is to say Bitcoin will never see 20K again, but it is a strong possibility, right? It's a strong possibility. We've already dropped 60%, 63%, okay? Prior corrections have been worse, okay? So, this correction over here was 84%. And if the argument at this point is that we can't go below the prior all-time high because it's never happened before, well, that's a dangerous line of thinking, okay? It's a dangerous line of thinking. You sort of just have to measure it from like a cycle top, right? And if you measure it from that point, you could argue that we could easily go down. A 75% drop gets you sub 20K. And a 75% drop is very much in the cards for Bitcoin based on the most recent market cycle peak. So with all this in mind, we need to consider that it is a distinct possibility that this easily could play out, and that a sub $20,000 Bitcoin is in the cards. And also, too, I think it's fair to just assume that anything in the regression band is fair game, okay? How we've gone below the regression band a couple of times, right? Look in 2015, we had a brief wick below it, and then in 2020, we had a brief wick below it. Okay, so the bottom part of this regression band down here is currently corresponding to $15,000. Okay, so my argument is that if the regression band allows for it, there's no reason to assume that it can't happen, right? There's no reason to assume that it can't happen. And then furthermore, we've made a lot of comparisons to the 6K level back in 2018 and then the 30K level in 2022. And again, there are a lot of similarities between it, trying to hold support at this level, just like we did with 6K back in 2018. And then ultimately the floor fell out and took us back down to the lower regression band, the fair value, before we finally found support at the 200-week moving average. So if this plays out yet again, we're not really that far off from our date with destiny at the 200-week moving average. And then at that point, we could at least start talking about the possibility of it being a cycle bottom. But even then, we know that the 300-week is also a distinct possibility as well. So the argument that I would like to just make clear is that I think the chances that we go back to the fair value fit to non-bubble data before going back up, I think there's a much higher probability that we revisit this area down here whenever that occurs before we can revisit this area up here. Okay, it's clear to me that we are leading ourselves into a new market cycle. Okay, this risk-off environment from the Fed is a pretty clear distinguishing, something that you can really look towards and say, okay, this is a distinct thing that when we go back to risk-on, we're starting something new. Okay, so because of that, and because we expect the Fed to remain hawkish for a few months, or at least, especially for the summer, right? They're still going to be raising 50 basis points more than likely. Since we expect this, no reason to assume that this won't necessarily, or it won't continue down eventually, even if you do get some short-term bounces. And by the way, we talked about a date with destiny even over here, and it didn't happen. But we also didn't go back to the regression band. And we talked about it over here as well. We talked about it over here. And look, it's never a straight line, so you could always get that bounce back up before coming back down. But I do have a hard time envisioning, this cycle starting anew with the strength that we need to see without going back to some of those lower levels, because that is where historically is really great value. You're talking about the accumulation phase of a lifetime type scenarios. If we can get down to those levels into the lower part of the fair value regression band, fits in non-bubble data, and it just simply hasn't happened yet. It takes time. Bear markets take time to play out. And again, so far, one of the things we've also said before too is that once we go below the 100-week, it usually is just a very short period of time before we eventually make it to the 200-week, right? So the 100 to the 200. In short order, it usually happens. Now, in 2014, it took a little bit more time. We dropped below the 100-week here. We had some wicks below it. And then finally, we dropped below it, and then we went to the 200-week moving average. So is it possible that Bitcoin stalls out for a couple months at around the 100-week moving average before going down there? It's possible. But I think any investor should be prepared for this scenario to come back down to these lower levels, even though it does correspond with the prior all-time high for Bitcoin. And by the way, if you still have trouble accepting it as can we go back to the prior all-time high, it's never happened before, maybe one way to get through that it could happen is that if you look from, say, this peak here to the cycle bottom from the next cycle, it was a 400% move higher. But from this peak to the next bottom, it was only about 150% move higher. So yes, we haven't tested prior bottoms in prior cycles, but we have gotten increasingly closer every cycle. This was a 400% difference. This is only a 150% difference. So perhaps this is the cycle where we test it, and maybe we even go slightly below, and perhaps next cycle we could go well below it. Let's just draw out a potential timeline here. What happens if we go back down to the, if we sort of just draw this back out, let's suppose that Bitcoin, what's that? I'm looking for some type of a tool, a path. Okay, so suppose that Bitcoin, and ignore the timelines because these are very hard to know exactly when it's going to occur. This peak here occurred in the early part of 2021. A lot of people were calling for us to go much higher, but again, you have to respect diminishing returns, right? Not all theories have panned out, even my own. Again, all models are wrong, some are useful, but diminishing returns is something that I do think will continue to play out. So let's suppose we go back down to the fair value, something like this. Maybe we can go sub 20K. And then if we do come back up to the top of the regression band, then the argument is that this peak over here, we'd have no problem going back below, okay, and maybe retesting retesting some of these levels in the future, and then ultimately trying to go back up, something like that. Okay, so I do think it's a plausible path for us to go down, test some lower levels around the prior all-time high, eventually go put in a new high, but then whenever we do, whenever we come back down, we could probably go back down and easily retest these levels, especially if we've already done away with the idea that Bitcoin can never go back and retest its prior all-time high if it's about to do it in this cycle. Okay, so hopefully this makes sense. We covered a lot here on the logarithmic regression bands fit to non-bubble data, and then of course there is the peak data, which essentially has you looking at 2.5 years from here to here, 4 years from here to here, a little over 3 years from this move. So on average, it's taking what, around maybe a little over 3 years from when we hit these peaks. So this last one occurred in March of 2021. So then, this is why I don't think we're going to go back up there this year. Okay, I certainly don't think it's going to happen this year. Unfortunately, but the bear market has really identified itself over the last several months. We've been talking about that. And once you get rejected off the 200-day moving average, that's it. I mean, it's just I think it's safe to say that when that happens, you're looking at a lower low, right? We talked about this lower low playing out as it did in 2018, and it's played out, right? You had the low, the higher low, the rejection off the 200-day, the failure here to put in a higher low, a lower low back up to the 200-day. We're seeing the same thing, right? We followed this for a while, and now it is in fact playing out. So supposing we do get some type of bounce back up to the 200-day moving average, there's a good chance that we get rejected, even if that were to play out and we just go straight down. If we forego this move back up to the 200-day and we just go straight down and we rip the band-aid off, then maybe we can gear up for a market cycle bottom sooner rather than later. But I do think it's worth at least exploring the ideas that we can go to prices you might not want just by looking at the regression bands. Okay, and this is something we talked about on the channel for quite a long period of time. If you guys like the content, remember to subscribe to the channel, give the video a thumbs up. We also have Into the Cryptoverse Premium at intothecryptoverse.com. You will get access to weekly reports and videos, the Telegram alerts channel, the Telegram chat room, the risk dashboard. We have an indicator dashboard where we have risk levels for a lot of different indicators to help identify the market cycle bottom and major tops when we get really extended by euphoria phases like we saw over here in early 2021. This one was a lot trickier. I'm just going to be honest, it was a lot trickier. And then also you'll get the trading view indicators as well. So intothecryptoverse.com, lock in the low rate, check out the sale. Thank you guys for tuning in, subscribe, and I'll see you next time. Bye.